There's so much money out there. If people panic, if Bank of America were sacrificed at the altar, and I could see that happening, I truly could. I mean, maybe there is no coincidence that Warren Buffett just wanted to make a profit and he's pulling out. He still has a big position there, but the point is, they're the ones who've had the big gold and silver short, according to Ted Butler, for a long time, 1 billion ounces of silver. If a bank like that failed and was bailed in, the amount of panic that would ensue in a matter of moments would necessitate people reevaluating their lives, reevaluating what they think is safe. And when a major commercial bank, if indeed something like that happened, we're bailed in. Most people don't even know what bail-in is. The amount of demand into the precious metals market in one day would wipe out availability across the United States. In one day, just like that.
In today's news recap, silver hits 12-year high, chasing gold's record-breaking rally. Silver rose to its highest level in nearly 12 years on Thursday, riding the coattails of gold's rally to record peaks as interest rate cuts by major central banks fueled investment interest in precious metals. Silver is going to continue to rally over the coming quarters because of the consecutive rate cuts and as China's stimulus could continue for some time, said Amelia Xiaofu, head of commodity markets at Boki. She expects the price to move towards the $37 level. Silver, both a safe haven investment and a key material in industrial applications, has rallied more than 35% so far this year. One of the primary catalysts for the rally in silver has been gold because of their strong correlation. The gold to silver ratio has come down with silver's rally, Gupta said. The gold/silver ratio, which measures the number of silver ounces needed to buy an ounce of gold, indicates silver's value in relation to gold. It currently stands at around 82. The bulk of the remaining demand for silver has been driven by the industrial sector, with the metal's usage in photovoltaic products like solar panels nearly doubled over the prior year. Spot gold hit a record high of $2,685.42 earlier in the day. Bullion has risen more than 29% so far in 2024, smashing records several times, fueled by U.S. rate cut hopes, safe haven demand, and robust central bank buying. Now we'll show you the best clips of the latest interview, but first, subscribe and hit that notification bell so you don't miss any recaps. Enjoy the episode.
How all the BRICS nations countries are accumulating lots of gold in those that are tied to Project Enbridge. Well, no doubt. And we've talked about why they've all been bringing it back and why they've all been buying. We find Saudi Arabia, who's straddling the line here, accumulating 160 tons of gold. Well, who cares, right? Well, the people care because they didn't report it through the normal chains, like through the IMF. And instead, it was the Swiss import-export numbers that flagged it. They're straddling the line. They've become full participants in Enbridge, but kind of hedging about their full participation in BRICS. They don't want to upset the apple cart, but the apple cart is going to turn upside down very soon. I did an interview yesterday with a guy from the UK, and he said something really interesting, and I thought about it. And I just wanted to throw it out there because I think it's fascinating when you think about, I've done these little comparisons for years. I've talked about the house price in 1960 versus today. I've talked about, back in 33, the cost of a men's suit with a $20 gold piece or a $20 gold certificate. But he said to me that in the United States, that the money printing, which is inflation, an increase in the money supply, takes, due to the Cantillon effect, it takes time for it to work its way through the system. But an increase in the money supply is what causes price inflation, by and large. And he said, the money creation in the United States has averaged roughly 7% for the last decade. Okay, that's the average. Well, the law of 70 seconds says what? You take the interest rate and you divide it into 72. It tells you how long before your principal doubles. Or in this case, if inflation or money creation is running at 7%, our currency has been cut in half in value over the last 10 years. And if what he's saying is true, that is a true statement. If he's saying 7% by and large money creation, and I think, what's his name? John Williams might say that's even underestimating, but let's just go with it for a moment. And so we talk about gold, and a lot of the financial advisors who will listen or talk to people who have portfolio in gold. Well, why would you own that? No interest. That's a positive real yield on the 10-year treasury right now in the 6 months. For goodness sake. They don't know what they're talking about, because not only has it outperformed the 10-year treasury for the last 25 years, but here's a cool little experiment. You see, if if this is my mug, this is an ounce of gold, even though it's an ounce of silver, and it's hanging on the bathtub, and the water drops out from under the bathtub as you pull the plug. Gold didn't go higher, the water went lower. And that's what I'm saying about the currency here. It's not that gold is going to make you wealthy. It's that it maintains your lifestyle or your standard of living. And let me paint the picture. So if indeed what he is saying is true, over the last 10 years, 7% into 72 would tell us 10.2 years, currency's been cut in half in terms of its purchasing power. Okay, if that's the case, what has gold done? Go back 10 years, gold was $1,200. What's it today? $2,660. It's gone up more than double. So it's retained its purchasing power, not by it hasn't made you wealthy. It's gone up a little bit higher than the dollar has fallen. And so that's the whole idea with buying gold and silver. When I talk about it is wealth, it's not about becoming wealthy. It is wealth. Yeah, it's outperformed a lot of investments, and it's done very well, but it's only just really kept up with the falling of the dollar. And I just want people to understand that as we talk about gold and silver, as I always talk about it, that's really where I'm coming from. And I think it's an interesting way to look at it. And you go back, look at the price of a house in 1960 versus what it is today in the number of ounces of gold. You go back to Roman times, you go back as far as you want, and it's the same thing. So,
in today's news recap, analyst predicts silver prices could reach $200, driven by demand for new EV battery technology. A financial expert with over a decade of experience in commodities markets has predicted that silver could reach $200 per ounce in the next 10 to 15 years, riding the wave of increased demand for a new EV battery technology developed by Samsung. According to Bambro, the new batteries may require 1 kilo of silver per car, driving silver usage sky high. Bambro believes that the precious metal will be able to reach $200 per ounce prices, supported by the emergence of a revolutionary new electric vehicle battery technology that uses silver in its structure. The new solid-state batteries developed by Samsung feature a silver carbon composite layer for the anode, allowing them to have an increased life, dramatically reduced charging times, and larger operating longevity. According to his estimates, each battery cell might require up to 5 grams of silver, putting the whole requirement for an average car battery at 1 kilograms. Bambro assesses that if only 20% of the yearly global car market adopts this kind of battery, 16 million EVs, it would increase silver demand sky high. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
In terms of gold holding up, it's held up in the face of positive real yield for the past 2-3 years. It's held up, or 2 years anyway. It's held up in the face of a strong dollar, and it's held up in the face of declining ETF outflows, as we've seen, like you're skiing down the Swiss Alps in terms of outflows. And now we're seeing the ETFs just start to pick up again, which is for the first time in 2 years. You're seeing reports like on Goldman Sachs that their trading desk is being inundated with gold requests, and the ETFs are starting to pick up. At the same time, we're seeing Powell pivot by 50 basis points. And they've been touting all along such a great economy and strong labor market. We know that's a lie with the revision of over 1 million jobs between the 200 or 300 they revised during the year and the 818,000 they revised after the year. We understand that it's a lie when they tell us that the CPI is 3.3% or whatnot, and John Williams tells us it's much more. And so pivoting in the face of all of these lies, when they tell us, that they feel confident that they've reined in inflation, yet they're 65% away from their target of 2%. It's a lie. And yet it, to me, speaks to the fact that they're very concerned. Now, as far as gold, we've had outflows on the ETFs. We've had a positive real yield. We've had a strong dollar. And we've had massive central bank buying. Now all of a sudden you have ETFs moving up and you have yields moving down. And you have a realization by the world that, all is not well. And I say that to you because immediately after he lowered the rates by 50 basis points, the bond market, the back end of it sold off, meaning rates went higher because the world is saying, at what point do we get tired of a country that's going as deeply into debt as you are, with all of the other issues that we've talked about ad nauseum? And at the same time, you now have the hubris to actually lower rates. They should have never lowered rates. They should have continued to raise rates. They've never even squashed the inflation bug, which is only going to get worse and worse and worse. Now, you look at that in terms of the price of precious metals, that hasn't even been fully priced into the equation yet, as far as I'm concerned. The American public has been largely asleep at the switch. And if we see a broad participation increase, as we've talked about forever, the 0.5%, if it increases to 2 or 3 or 4%, as paltry as that sounds, represents a substantial increase in demand. I don't think that the markets have even begun to price in things such as the rolling out of a BRICS settlement currency, such as the American participation and $1 million a year. There's so much money out there. If people panic, if Bank of America were sacrificed at the altar, and I could see that happening, I truly could. I mean, maybe there is no coincidence that Warren Buffett just wanted to make a profit and he's pulling out. He still has a big position there, but the point is, they're the ones who've had the big gold and silver short, according to Ted Butler, for a long time, 1 billion ounces of silver. If a bank like that failed and was bailed in, the amount of panic that would ensue in a matter of moments would necessitate people reevaluating their lives, reevaluating what they think is safe. And when a major commercial bank, if indeed something like that happened, we're bailed in. Most people don't even know what bail-in is. The amount of demand into the precious metals market in one day would wipe out availability across the United States in one day, just like that. And I've seen it, and you've seen it in the few short years we've worked together, Dunnigan. You've seen it yourself, where I'm not really being sensational on this at all. It happens that fast. And, to get an order for $50 million is unusual, but I've done 2 of them. And to get them underneath that, we've done lots and lots of them. So how many of those just one company does it before things get really crazy? And we're just one company that, not long is what I'm saying. And I mean that sincerely. It will define this market. People on the outside will say, geez, the price is so expensive. Everyone else who's trying to get it will say it's so hard to get, it's not even funny.
What do you think of Andy's take? Do you think gold and silver price manipulation will end up soon with prices soaring to record highs, or do you disagree with him? Post in the comment section your price prediction for silver by the end of the year, and share with the stackers your exit strategy or buying levels. Me personally, I'd be looking forward to unwind a significant portion of my silver at $50 and would be selling all my stack if we get past $100. Now watch this video right here because it's a perfect fit for you. I'll see you on the other side.